We're always looking ahead, looking at what the market is going to look like in the next 5, 10 years, and building businesses and platforms that will enable these companies that we invest in to take advantage. Industries and companies we invest in today, I tend to refer to them as emerging sectors. Now, they are not sectors that do not exist, but they're sectors that are being created in these markets as they're going through their growth. I believe where we are today is at the tip of the iceberg. We are yet to see the full potential of these economies that are yet to come.
Aside from having the traditional investment toolkit in our investment professionals around structuring deals, identifying the right deals, we also have a team that has strong operational capabilities. And the idea is not to run these businesses. The idea is to understand that we're investing in these businesses, understand where the gaps are, and part of the value creation plan is to fill those gaps and help take these businesses to the next level. So increasingly, we're seeing the regional and global champions of the Southern Hemisphere are becoming the acquirers and the consolidators. And I guess the role we're playing is intermediating that, allowing these businesses to grow to a point where they map into a strategic target for these businesses in a lot of these cases.
Just to give a bit of color, a Caribbean bank bought one of our banks in Ghana. That's a long way to go to buy a bank. Now that's the South-South move we're talking about. It's trade, it's investment, it's people. So we essentially are servicing the South-South axis.
So I think long-term investors recognize that growth is coming out of these markets, and investors seek growth and returns from growth. So obviously, but these markets have their own risks, and there's volatility around that sentiment from time to time, but the long-term trend is a positive one.
Investors today are keen to get into these markets, but yet they struggle, many of them, as to how they should access these markets, because no longer is it a choice of a small pocket. It's going to be a major part of the portfolio, because more than 50% of the trade is going to come from these markets in 20 years from now. So hence, that requires them to find a way how they can penetrate this market. And I think the firms like ourselves that have the right people, the right structures, the right ingredients, the right approach that gets close as possible to how they are used to it would help them in that decision-making process.
So historically, it's been intrigue as opposed to genuine interest that they act on. And I think the challenge was getting to understand the markets more. So that is happening as that growth becomes more and more demonstrable over a period of time. I think that is what we ultimately solve for, is the on-the-ground presence, managing the risk around capturing that opportunity. So increasingly, that helps to gives investor comfort. If you look at the DNA of the firm, the focus on operational value add, the focus on having an entrepreneurial mindset, not just financial engineering, but also having the ability to structure deals the right way. The focus on collaboration, the focus on knowledge sharing. It's a different model for markets that have a lot of future promise going forward and have delivered for us in the past as well.
Today, a lot of the technology and the application into private equities industry has come from the West, from North America and Europe, and we've applied it and fine-tuned it here and there, and it's working as it should. We are going further than that. We are developing our own strategies, our own understanding of how things are done. We expect in years to come, we will export that to Europe and US. I always tell my son, and from time to time, by the time you come out to graduate and start working, the head office is not in London or New York. It's going to be China, India, or Indonesia.